Okay, so I think we can start. Just want couple of suggestions from you guys. Let's see what you have to say. The plan for the day is completing your Preseen financials and the balance news articles. So, do you guys have an idea of how financial statements should be read, or is it the first time you're doing?
I have a slight idea,
Right. So, did you
but
do your.
didn't look it from the start.
Okay. Varun, what about you?
Same. I read it in my degree, but like haven't got it thoroughly.
Okay. So, I just had this thought in my mind. Let me give an idea of how exactly your financial statements are, the theoretical aspect. We do the news articles and then we work out the ratios together. Is that okay?
Yeah, that sounds good.
Great. So, is my screen visible? Can you see the Google
Yes.
Sheet? Okay,
Yep.
big enough?
Yes.
Great. So, what exactly is your understanding of your financial statements? Why do you think it's important? And what relevance does it have to us?
I think it's important for the company to show accurate records of their, transactions, day-to-day activities, how they can compete with the competitors, and how they can stay relevant based on their financials. So, I think financial statement is important to understand the company as as a whole, like how it performs in the market, and in what position it is, and yeah. So I think it's important that in that sense.
Got it. What questions are you expecting in MCS from your financial statement analysis angle? Any expectations that you have? What do you really think can come as a question?
Probably to assess you know the ratios and something like that. I don't know, maybe something similar.
Right. So the probable questions that you will get for MCS is, with the existing ratios, what impact does it have when we go for a merger or an acquisition, or we bring in a new product? The impact it has on your financials. This may not be a direct question, but when there is a variant that focuses on M&A, it's better to touch base on the ratios, the impact it has on ratios like your gearing and profitability. It gives a very good point for the examiner to understand that you integrate across your three pillars and answer. So even if there's no direct mention, I would recommend you to do it. It gives a pretty good look. So the ratios, once we work out, please make a list of it, have it in your phone or whichever you keep seeing regularly. Go through it every day. On the day of exam, it will be a savior. And I had a lot of questions with regard to this. So, as you said, it is descriptive what has happened, why it is happening, what is going to happen, and how can we prevent it from happening. So, these are your basic WH questions which your financial statements helps in understanding. Now, why are we doing it? To give useful information to the relevant stakeholders. Now, your stakeholders can start from your investors to your lenders, creditors, employees, or anyone. Now, when I am for example, let us say you get a variant on assessing to introduce a new product range or something in Trimayr. Or what do you think can happen in Trimayr? What is the next possibility for them? What do you see as their next action step? Varun, Siddharth, are you guys there?
Yes, yes.
Right.
I guess they're already a leader in the market in terms of um, how they are in the market share. So
Mm-hmm.
um, I I think, like, if I'm not wrong, I don't know if they're already global. I don't remember. If they're not
They are
global, then
not global. They are within the Dazzland region.
exactly. So I think since they are already there, like in the market, they could either acquire another smaller, or upcoming, let's say another similar, something similar to their industry,
Mm-hmm.
or something, a startup, a barber shop, kind of a salon or anything like that. Or they
Right.
could go global, based on their expertise, and try to understand other markets, and yeah, how well they can perform there, and do that analysis and probably take that decision. So this could be another, their next step forward.
Okay. Varun, what do you think is the way forward for Trimayr?
Um, I think they can open more franchisee and uh,
Mm-hmm.
they can spend more on the marketing because when they started the business, that's how I think they got more celebrities and that's how they got famous. So I think if they open the new franchisee, the marketing would really help.
Right. Now, when I am evaluating a proposal, you will start with your basic cost benefit analysis and you should also see how well it fits into the existing business model. These are the two things which has to be taken care of. Along with it, your financials go hand in hand. So, this one, whether there's a direct point out or not, it keeps coming. Just to reiterate that point. Now, when I'm going global, as you guys were saying, it's all the more important to make sure your financial reporting standards are on par with the international requirement. So, we are following IFRS, so it's a green tick. Suppose if the entity that we are collaborating or merging with, if they are not having, you might have questions related to your relevant consolidation adjustments. What has to be done? I hope you guys are on par with your F2 revisions as well.
We haven't started F2
Okay,
yet.
okay. So we'll start today with your financial statements and we'll see how it goes. But have an idea of what consolidation adjustments are, what has to be done.
Okay.
This was a question just asked if you have an understanding of consolidation and those principles.
Maybe not in detail, but yeah, a little idea, I guess.
This is one sure variant which will come. When I gave my exam, I had a new product range introduced, and my friend got a consolidation one. Merging with another entity. So these two are for sure majority candidates come into these two variants. So it's pretty important, and please, once the portion is taken, you can start with it. So, general, any other questions or any clarifications?
No, nothing yet.
Got it. Okay. So, when I say your analysis of your financial statement data, it starts with every line item. You find out what that line item is made of and what changes it has. So, your first important one is revenue. This is the inflow for any company. So, interpretation of a revenue could be a problem because your revenue recognition is one ambiguous area and one that is prone to a lot of manipulation. So, obtaining a detailed breakdown of revenue may not be available. So, you will have to point out based on these assumptions, this is what we have come to a conclusion. So, can you tell me how revenue can be manipulated? Any answers for that? Just be chill and tell me whatever you guys know. No pressure.
Maybe like misrepresentation of financial statements can be a way to manipulate revenue.
What corporate governance structure are we following? Was the business model concept taken or
Like, no, if that comes under F2, then no.
no? In the pre-scene, did you have an understanding of what the business model is and the
Yes, yes,
board of
yes,
directors? Right.
yes. Yep.
So, looking at the board of directors, does it seem to be an organization that stands by ethical principles, or are there any flaws? You can look at it quickly and also say not an issue. Had a chance to see the previous pages, or
No, I mean I couldn't go through this week. Go
no
through it,
problem?
so I was a little busy at work. So
Okay. So, just taking the pre scene, one,
yeah,
Varun, any points from your side?
Now trying to look into it.
Okay. Let me know once you look at it, and we'll see if we have the same thoughts. I hope you can see my pre scene.
yes,
Okay. So, looking at the pre scene, there's just one thing which I want to say. It's always a balance between your executive and your non-executive directors. Now it has to be your NEDs should be higher than your EDs. Going by that, it does appear to be, or there's a proper balance. When there's such type of a balance, you can close your eyes and say we are following a best practice corporate governance. Whether we are listed or not, if we are doing that, the chances for your financial statements to be misappropriated is likely to be lesser. So when I say that my revenue, the major places to play with your gross profit would be nothing but I'll just share my screen again. Two areas to go by would be your cost of sales, where your closing inventory can be overvalued or undervalued to get the right profitability figure. So that's where the maximum ones, and recognizing revenue before what do I say? Let's say for the year ended 2024 statements, you're recognizing revenue up to 2025 March and bringing those 3 months also into it to inflate your ones. Now, why is your revenue so critical? It is based on this that your compensations are devised. Of course, we are having caveats in place, but this influences it to a greater extent. So, which is why your revenue becomes very critical to understand in a place where you need more data to find if there's no manipulation going on. Your gross profit is arrived after deducting your revenue and your direct expenses. An entity can handle an increase in direct cost if they are able to raise their your selling prices, but this need not happen. Now, considering the intensive competition which we have in the existing industry, we are just one among the other major chains. So what happens in this scenario if you raise your selling prices, and price is the differentiating factor if I'm not wrong with Trimayr and the other competitors, at least to a certain extent, not like your down market ones. Correct me if I'm wrong. Hello.
Yeah.
Yes, so just wanted to hear.
So in trimmer, we have, trimmer charges little premium because they are mostly stylish from long period and they are
Right.
existing partner, right? So I think charging higher price for them, it will not matter because again, if you have a good hairstylist, price can be the price cannot be the factor, differentiating factor. The
Hmm.
hairstylist will be the differentiating factor, right?
Right.
Yeah.
Right.
So I think price now means increasing price for a premium or a good
Hmm.
service, people like to pay, right? If you're
Got
getting
it.
a good service.
Right. We also need to look at your competitor's position, which we will analyze when we look at the other person. I believe that name is, it was Palo and True or something. Yes, Palo and True.
Yeah,
We'll have to see.
it is Espalo, another one.
Yes, yes. So your gross profit margin versus your operating profit margin, there will be a great decline between both, because your indirect costs generally make up the majority in the total cost proposition for majority of the industries. So what is there in your operating profit? You have your indirect cost, which is your finance, tax, your income tax, selling and distribution, marketing. These things are taken to your operating profit. Now, there are two ratios. One would be profit before the income tax and profit after your income tax. Now, this one directly affects my return on capital employed. Your return on capital employed is nothing but your EBIT, which is your earnings before interest and tax by your capital employed. ROCE is a key investor ratio. This is what investors look for while investing. Your effective tax rate, impact the tax has on entity's profit before tax. Share of your associates' profit is excluded. This is why your consolidation comes into picture. Which one should be taken and which should not be taken? Which one can you consolidate and which can't be? You generally consolidate your subsidiary, but then for your associates or your joint ventures, there are certain exceptions. So going by your IAS one, they don't anchor. Okay. Is there someone else on it? Going by your IAS one, it doesn't encourage reporting of operating profit as a separate line item, but entities can present if they wish to. Now, the reason why I'm presenting this is to give a good sheen look. If I say that my operating profit, I'm able to bring a lot of operating effectiveness, I'm inclined to get more investors because efficiency is what matters. So your ROCE gives you your overall performance of an entity. It is the percentage return on your total investment. Management's efficiency is generating profit from the available resources. Now, my capital employed will not be greatly increased. So, in such a scenario, how well are my operations being run, and what tax planning am I having in an ethical way to get the maximum returns? These are the informations which you derive from your ROCE. Share of your associate profit is excluded. Your share of the profit and investment is also excluded. Only your subsidiary is taken. Your subsidiary, going by that, it's up to 50% of more or investment in the share capital. That is your classification for subsidiary, and your associate would be in your 30 percentage ranges. These are the general benchmarks. Interest on your overdraft is excluded in calculating your earnings before interest and tax. These were mistakes which I used to make when calculating ROCE. So that's the reason I have included them right here. Now, why am I not including your non-current assets that don't contribute for generating profits are excluded? My capital employed is another figure that I'll have to be careful with. Whichever is generating profit or that is used to generate the operations or run the show, only those things are taken. Things which are lying idle is not taken. So you will have to evaluate the data points and then come to both of the figures. All good and all clear so far? Any questions or any clarity required, please let me know. Feel free to interrupt. Hello? Are you guys there?
Yes.
Right. So
Yes.
any doubts, or is it seeming too much or able to make
Uh,
sense?
yes, actually, we have to relate it to what we're gonna, actually look into F2.
Right. Anything that I can help to ease the doubt? Is there anything else you want me to explain in detail or have doubts? Please let me know.
Okay, yeah, no problem. Yeah.
Okay. Varun, anything from your side?
To be honest, I haven't gone thoroughly to the pre-scene,
Mm-hmm.
so that's why it's making less sense. But I think I need to work hard on the pre-scene, and it will make more sense.
Right. But you're able to understand what is your financial statement made of, how exactly things are calculated?
Yes.
Right. Okay. Any questions with whatever we discussed so far?
No.
Okay, great. So your liquidity is the other area. Now, as much as short-term decision making is not critical at an MCS level, it still forms an integral part. The reason why liquidity is important, if I can't run the show on a short-term basis, there's no guarantee I can do it on a long-term one. So, which is why looking at your key liquidity ratios is important. Now, by liquidity, I mean how much of resources do I have in my hand to pay for my creditors? Am I able to manage the operations on a day to day basis efficiently? Or am I in a cash crunch? Now, what typically indicates your liquidity crisis would be your overdraft is near the permitted limit, or there is a significant depletion in your cash resources. Do you guys get your cash flow statement analysis in pre-scene, or is it just the financial statements, your SOPL and SOFP?
I'm not sure actually.
Just check out your pre-scene, because we used to get about 2 years before we had your cash flow statements also given. Not sure if that's the trend now.
I don't think the cash flow is given. But
Okay, okay.
one question, when you mention about consolidation,
Right.
so what are the components you will be looking at consolidation?
uh Components as in, can you explain more,
And
Rakesh?
like you mentioned, no, in the first line only that the trimmer has to do a consolidation under IFRS, right?
Right.
So for a company where who managing in same country and in the franchisee model. So what kind of consolidation question or what kind of consolidation we'll be doing on the financial ground?
Okay, okay, so you're talking about the adjustments that will be
Yeah,
tested.
yeah.
Okay, so going by that, first the share capital increase and decrease, what is happening? Your fair value adjustments, if you're getting the assets in place, the goodwill differences, sorry, not the goodwill differences, the goodwill that you're getting on acquisition, that will be expected
But
to,
but here mostly Trimayr is not doing any acquisition. It is running in a franchisee model, right?
right?
And they
But
already
this,
have their few own salon.
mm,
So nowhere in the arguments, nowhere in the question they mention that they will be doing an acquisition. That can
ye-
be one of the way where we can say that Trimmer can increase his share by having acquisition done. But
absolutely.
yeah.
That's how your unseen questions are generally formed. When I gave my case study for piping, which was into tea manufacturing, we never thought that there could be an acquisition, but that was a complete variant which came.
Okay.
So that's another possibility that can be there. And consolidation, sorry, acquisition was on a similar line of business. It was a cash rich company. I don't know how exactly Trimayr is positioned right now. We don't have a lot of details with respect to the cash flow and cash position. In case if there's a positive cash resource or there's a good relationship with your financial providers, then in that case going for an acquisition will not be an issue. You can leverage it, going for a debt and equity component, something like that. So these were your key adjustments. As of now, this is what I'm able to recall. If I get anything else in my mind, I will communicate in the group.
One more thing, the total number of just to add on, the total number of salon or the business is 52,000 across Dazzling.
Right.
Under this scenario, uh, so there are multiple. I mean, there are only 6 players who is playing well in the as an organized sector. Rest
Right.
are all organized. So when you're doing a franchisee model, what means it will be best that whatever the shop, mom and pop shop are there, we can convert that into a franchisee model. So by that, Creamer doesn't need to spend more on the acquisition, or instead doing a franchisee, they'll get goodwill payment, franchisee royalties and all payment, right?
Right. Right.
So in that case, Creamer position financial will be higher, right? Get greater.
Absolutely. Now, when I'm looking at the financial statements, most of the ones that makes your revenue are your royalty payments. That's how the franchisee model is going. So we'll have a discussion about the analysis. We'll find out what each component weightage is there, how much each of them contribute to the total revenue.
Okay, thanks.
Right, right. So going to our current, your key liquidity ratios would be your current quick ratio. And things to identify in liquidity is your overtrading activity and the limit at which overdraft is. Do we have thin capitalization rules or interest cover and those ratios are relevant or how is it? Any idea about that?
You said my interest coverage issue, right?
Yes, yes, sir.
I think
I think that should be a relevant ratio, your interest cover, those things, because that has a direct impact on assessing your liquidity. If my profits are decreasing but my interest alone has increased, then the impact it has, what covenants are in place, those are things which your financial statement analysis talks about. My current ratio, sorry,
I said okay.
okay, okay. Your current ratio is your current assets to current liabilities. Now, which one will be included in them? That is what you'll have to differentiate. I believe you have IFRS 16 tested in your F2 syllabus. So, one key mistake or a potential pitfall would be finding what is the current liability element in the lease liability. So, that will be included in your current liability in the denominator part. These were mistakes which I used to do, and one recommended practice would be whatever mistakes you do, please make a note of it and go through them or have that written down. It will help you for your revision. These are potential areas where little differences will come and you lose out on marks. Your quick ratio is your current assets excluding your inventory taken as the numerator and denominator being the same. This is a better indicator of liquidity, but are we having enough inventory to say that is inventory a significant component of your current assets or is it negligible? Only in that case you can conclude if your quick ratio really makes sense. So as it goes, the rate at which entity is able to generate cash is known, and it is more apt if inventory is tough to realize as cash. Certain industries, the rate at which inventory is converted into cash might take a longer period. So in that case, there's no revenue inflow. So what happens in that scenario? Are you able to run the operations without getting revenue inside? But I don't think that's the case for Trimayr because it's a pay and do service. Payment is done, there's little bit of credit ones. Even if there's credit, it's only with your suppliers. With customers, you don't really go on a credit basis. Your efficiency ratios would be your inventory holding period, payables, receivables, asset turnover, and non-current asset turnover. Now, there are specific ratios for this, and we'll discuss about them as we progress. Your capital structure ratios is found out by looking at the gearing, interest cover, and the dividend cover. Now, my gearing is nothing but your debt to equity. Now, whenever there's any major financial decision or a change in the operation, the first thing which I will have to see is the impact on gearing. Now, if there's a covenant or a loan, let's say we have taken a loan and they say the gearing has to be 2:1. In such a case, I will have to say any proposal that I introduce should make sure that the gearing stays at 2:1. Otherwise, there will be some penalties or in worst case scenario, you will be asked to repay the loan. So that's the reason why gearing is very critical. Okay. Is someone trying to say something?
No, trying to ask, I just
Okay,
read.
okay.
So when you say gearing ratio is very important and it has a compliance against company corporate law, right?
Right, right.
So when somebody's gearing ratio is more than what is expected as per the industry standard, that time there will be a compliance issue and the corporate means the company like SEBI in India and other country, so they will impose a penalty, right?
Absolutely. There will be penalty and worst case scenario, you might be asked to repay it also. Now we'll have to see which limits we are floating in.
Okay.
Your typical questions would be you're introducing, as we were discussing before, going on more franchising models, so making your unorganized as a more organized sector, or you go for an acquisition, the impact it has on your existing financial position. These are your potential evaluation questions. Suppose you feel it may not be asked directly, it can just be a P2 and E2 testing area. If that's the case, if you can insert these points, it'll look pretty good. It says that you know even across pillars and you are tested well. Any questions from Siddharth or Varun?
No, nothing yet.
No.
Okay. So your interest cover is number of times profit will cover the interest charge. Higher the better, and stability in profits is key right here. Now your interest cover along with gearing can be stipulated in your covenant terms. Average rate of borrowings, typical interest rate that entity pays on its borrowings. Finance cost divided by borrowings is how you find out the average rate. Now, why exactly is the interest rate important? There are two types of interest rates. It can be fixed and floating. So, the way you manage between both is the game changer right now. You'll have to find an average rate that can meet. Your floating interest rate keeps changing from time to time, but your fixed one changes. So, the rate at which you can move from one method to another, going for an interest rate swap, those things are there in F3, just giving a heads up of what it is. Dividend cover, number of times profits will cover dividend payments. If shareholders require higher dividends, greater the payment. Now, are we self-funded or how exactly is the model for Trimayr? Is there any details on what shareholders are expecting? Anything that you guys could make sense of so far? Hello. I know you didn't have time to go through the pre-scene. That's all right. Just wanted to ask if uh, there's something that you want to add on. What do you feel in general? Hello.
Yeah, I don't have anything to add to it.
Okay. Now, the reason I'm asking about your dividend cover is, suppose if your investors want dividends as a regular type of payment, they are not okay to compromise on it. The investment decisions which you make has a critical one. Your investment decisions is what your P2 is covering, your investment appraisal. So, knowing what exactly your shareholders are expecting or have as a potential expectation matters. Making sense?
So, like, in the consolidated statement of changes in equity for 2024, I
Mhm.
don't see dividends in like under share capital and premium. Like it's more or less like retained earnings, I guess.
Yes, your dividends are shown right there. The moment in your dividends are taken to your retained earnings.
Yeah, exactly.
So, okay, when I meant your financial statements, can you tell me what all is covered in your financial statements?
I think the profit and loss, changes in equity,
Hmm.
financial position, um, and yeah, and the consolidated statements like of of the Pallu and True as well. Like I think
Okay.
extracted.
Your Pallu and True is your competitor one.
Yeah, Trimayr actually it's only profit and profit and loss, change in equity, and the balance sheet.
Okay. Added to this, you have your cash flow, your notes and disclosure. These are what your financial statements encompass. So when
Yes.
I
Okay.
say your financial statements, you will have to make it, bring a relatability with your notes and disclosures as well. Not disclosing the enough or adequate information will again attract penalties.
Okay. Okay.
A conclusion and action step must be to be taken will be derived from analyzing your financial statements. This includes whether to pursue an acquisition, whether to provide finance for a credit customer, should alternative suppliers be looked for in case they go bust, whether to engage in business with current financier or not, what options do I have in terms of continuing a product or abandoning it, should shares be held or sold. So these were the various points that came to my mind while looking at the financial statements. Any more, anything to add on to this? What else do you think you can understand from your analysis? What else can we make sense from this? Hello? Is the class boring?
No, it's just that I don't know what to answer. So yeah.
Okay. Anything to add on to this? Or any points that you think requires further discussion in this list? Or is that it? Hello?
Just trying to go through that, So
Right, right. Okay, okay. Siddharth and Varun?
Yeah, I'm just reading this, the conclusion and action steps what we take in that
Okay,
one.
okay.
Yeah.
Varun, hope things are okay, on track.
Yeah, just reading it.
Okay. You want me to explain something again? Let me know. We can do that. Not an issue.
Uh, so I got a call. Can you repeat this one again, please?
Okay, so I was saying, looking at the financial statement, what actions can you take? What conclusions can be derived? And when I said financial statement, it includes your SOFP, SOPL, your cash flow statements, notes and disclosure, and the consolidated ones apart from the individual ones. As of now, they have given it as consolidated. Should there be an acquisition or a merger going on as a exam variant or in the future, what impact does it have on the overalls? These are the things which we were discussing. So, looking at the existing financial statements, you can conclude if you can pursue an acquisition, whether you can provide finance for a credit customer, should I look for alternative suppliers in case they go bust, whether to engage in business with current financier or not, what options do I have regarding a product line continuance or abandonment, should shares held or be sold, what exactly can we do? These were things which I made a list. So anything to add on or anything to discuss more? This is what I was asking.
Or um, I think it can also be used to you know, see if they can start their business in another country, let's say a neighboring country,
Mm-hmm.
uh, where they may or may not be already known. Because let's say I'm currently in Canada, okay, and if a brand like Trimayr is very popular in Canada, there are chances that some of the US, at least in the bordering states of US, can know or may know about this already. So they can, based on their financial statements and analysis and analyzing the market, they could decide if they want to, start another business in the neighboring country, like say for example, in my case, in the US.
Right, right. Possible. You can come to a conclusion for that. Going for an overseas expansion. Any other counter arguments or any other suggestions about these points? Whatever was included? Or is that making sense?
So one question, it's not a question. How this is related, means how we can correlate this with the current financial provided in the present, and that is what we can see, and what we can't see. That is, you mentioned ROC, ROS, and all the important gearing ratios, and where this will come in place when we, means in terms of exam perspective.
Uh, okay, so you're asking how exactly this relates to the questions that can be asked.
Yeah,
Is
means logically the financial position given in the pre-scene, I think how this all point what we discussed, we can correlate. Okay.
We'll have to correlate that by working out the numbers. We will work out on the numbers that's there for the plan today or in the sessions which we have. I've made a rough working of it. We'll just have to key in numbers and see. With that, we can understand what exactly can be taken, what strategic options we can look for.
And considering that, because now the question of consolidation, when Siddharth has mentioned a point that that's let's say Trimayr is famous in Canada, and
Hmm,
in the nearing country, means the US, the border, means that can also means Trimayr will be known that area, right? So
right.
US can also, Trimayr can also expand in US. Now in such scenario, how the IFRS will play a role? What is the role of IFRS in terms of consolidation?
In terms of consolidation for IFRS within the particular region, if they are adopting IFRS, that's there. And as we know, IFRS is not legally imposed. It is a practice that is there. It's at any time your national regulation takes precedence. I believe in US it will be your US gap.
Yeah.
So we'll have to see the difference between US GAAP and your IFRS. Is there a major difference that's coming when it comes to recognition of items? That's another limitation of your financial statement analysis. Drawing comparisons, if there are different accounting policies, it'll be tough to compare. So that's the case between IFRS and your US GAAP. We are looking at coming to a greater degree of standardization, but I'm not sure exactly what difference it will have. For
Okay.
now, looking at the exam scenario, it will be even if you're launching in a different place, it should be an IFRS one that is being followed. In case it is not, you'll be given relevant details on how exactly the recognition happens. So the difference between your IFRS versus the recognition given by that national standard setter, that will be the answering point.
Okay.
Okay. So coming to my limitations, financial reporting information, historic data, it financial information is only published and it's after 3 months from the reporting date. So this definitely gives a limitation on how much you can identify the trends, and not everything is being given. Inflation is not accounted for if you're going for a historic way of recognizing the cost. That's what happens with your PPE if reevaluation does not happen on a regular basis. Now, the extent of PPE in Trimayr, we'll have to find that out. Now, what all can be categorized as property, plant, and equipment? It is not just a manufacturing sector that will have heavy PPE. Your trimmer can also have that. If you take the financials, just going to the financials, 1 second. It's 178.3 million as your property, plant, and equipment. Now, this one is, of course, consolidation, but even on an individual basis, if we divide, can you see my pre-seen screen or is it the Google one?
It is, we can't see, it is the same page.
Yes, yes, in just a second, I'll share that. Mm, So I was saying your property, plant, and equipment, it's for 178.3 million and 176.4 million in the previous period. Though it is consolidation, even if we have to take it on a single salon basis or something within a particular area, it does contribute to a substantial amount. So, what all is included as PPE within this industry, we'll have to find that out. Let's just see what exactly is there. What do you think can be a PPE for a hairdressing industry?
Sorry, can you come again?
No, no. Property, plant, and equipment, it's appearing to be at such a high level. So, what is contributing to your property, plant, and equipment?
Because
If
I think this
yes,
the area, the store area means the shop, right? If you are owning, that will be the property.
okay,
Plant and machinery is the text. What is the plant and machinery? Plant and machinery is season and all stuff, right?
possible,
But
possible.
the coloring machines, the coloring
Hmm.
equipments, special equipments.
Hmm.
So that would be the plant and machinery. ACs, because all these streamer will be having AC, but of its AC. The,
Right, right.
the furniture.
Hmm. There's also a lease component which is being given, so we might also be going for a leasing method. We have our places in your city centers, and that's what I believe your mid market is in. Let me just check
Yes,
that
I
out.
think it's mostly in shopping malls and
Right. Where you attract your office workers, I believe that's our consumer group, at least the target ones.
yes.
Right. So those places will generally be taken on a lease rather than buying it on a full basis. So that's about it. I'll just share my Google Doc. So drawing comparisons as we were discussing your IFRS versus your local gap, what exactly it is. Now comparing from one region to another is always difficult. So when I go for an overseas expansion, it might seem attractive, but when I'll have to compare and bring it on a par to par basis, if it can turn to be an unattractive option as well. Let's say if there's a lot of currency fluctuation, then in that case there will be no stability that can be drawn. Different entities within the same industry have different activities and vary in size. So, what if Palo and True, the competitor, has a different way of operation, a different recognition criteria? Now, not all recognition criteria will be explained in detail when you look at the financial statement. So, these are the potential drawbacks, and not potential, these are the drawbacks. Now, the figures which I'm using for your ratio analysis, I was talking in the beginning about your manipulation. If I'm looking at your year end figures, which is what your revenue, the major area would be your cutoff differences that come in. So, let's say, as I said, revenue is the starting point for building the compensation for a lot of executives. No matter you do have caveats, it's the starting point. In such a scenario, if there are places where I can distort the figure, I will have to identify and make sure it reflects the reality. You will have to have a very strong internal audit procedure in place. Revenue recognition is a very key IFRS standard that will be tested in F2. I had an entire 100 mark one. My question 2 for piping was your revenue recognition. The way you recognize has an impact. The problem with your revenue recognition, just a heads up, I'm not diving deep into it. Based on your performance obligation is when your revenue is being recognized. So how exactly do you categorize if a performance obligation is satisfied or not? Those are the critical ones which we will have to understand. Now how will I understand that? It's dependent on the contract. And where you need additional information, it's always okay to mention that with additional information, so as so and so you can understand and give a better conclusion. Your creative accounting, your timing of transactions can be manipulated. So, the inventory valuation is another key area when it comes to determining your profitability. So, different valuation techniques give different figures. So, whichever is favorable, that can be adopted. Classifying items. When it comes to classifying items, I will have to refer to your IFRS 9 financial instruments. Now, within my financial instruments, there are three types: financial asset, financial liability, and the other one was, if I'm not wrong, that was a debt financial asset, which is basically your convertible shares. Yep. So the differences between which and which recognition are you going for? There are three ways in which your liabilities are recognized. It can be your amortized cost. I can recognize it in your SOPL and OCI, or just recognize it in your P&L. So which method am I using? What impact it has on the profitability? You will have to mention if there is a question talking directly about your IFRS 9. Now, creatively, if I can position my figures, that can be another possibility, because to meet your covenant restrictions and also meet your market expectations. This is what your analysis of your financial statement broadly covers. This is a summary, and I am sure you have your study text which you will be referring to.
Not yet shared with us for F2.
Okay, okay. Then I think Misbah will be sharing it soon, because F2 does form a significant part of your MCS. Okay, so your cash flow statements is another one. Cash generated from your trading operations, dividend and interest payments, investing activities, financing activities. These are your typical points or components within your cash flows. Now, one more advantage is looking at the financials, you can to an extent predict what is the cash flow position. We will talk about that when I'm analyzing your finan when I'm analyzing the financial statements. Any questions in the points given right here? It's you can go through it and let me know. It's pretty much the same thing. Your cash versus profit will be another critical evaluation that you'll be making. You can be profitable but still have a cash crunch.
How that would be possible? Because when we have more of receivable, right?
Right.
But in this set of business where it is mostly done on then, so what kind of receivables delay you'll see here?
When it comes to receivables, I don't see, but there can be stipulated rental agreements or lease liabilities that have to be paid. So, is my revenue going and paying off for these things, leaving lesser cash for me to handle my day to day operations? So, that's how your cash crunch is possible in this setup.
But any which ways that cost is factor, right?
Sorry?
Any which ways the cost is factored. So we know that that lease payment has to be done from the revenue generation, whatever revenue we generated and cash
Right,
we collected.
right.
So so my in current scenario, do you not think my cash position and my profit position will be same?
Mm,
ROC.
it should. I wouldn't come to that conclusion. I will have to look at the numbers and then only conclude. It can be otherwise also.
Okay. Okay.
Right, right. Making sense? Or,
Yeah, it makes sense, but I was trying to think under this current set of business
mm,
where usually people pay cash immediately, right?
right.
It is not a
So,
big
mhm,
amount.
that is true. I am just going on a very cautionate manner. Since there is heavy competition, I think we'll agree to it. There is heavy competition within this industry, no matter we are a well established chain. Agreed to that, sir? Or any counter arguments for this on your intense competition? Varun, Siddharth?
Yeah,
The heavy
as far as
competition.
marketing is concerned, I think that, yeah, there is intense competition. Like there are other players in the market,
Right.
be it their own individual or franchisee. Like they do
Hmm.
have competitors. So
And there was also a mention that your customers are loyal once they come to the firm and, sorry, not to the firm, to the salon. Along with it, we were also seeing that they have the preferred hairdressing stylist. No matter these things are there, if I find someone better, or what if the consumer trend is given as a change, I'm looking at new ones. You can always explore, right? I do have my favorites, but if I find something more attractive, I'm likely to go right there. So a differentiating scope between this industry is depend is a very ambiguous one. It's completely creative based. So where there's creativity, that is where it thrives. So looking at that, it might have an impact on the revenue. So that's one reason why I'm playing it in a cautionate way. But as you said, your cash and profit is likely to be more or less on the same terms, considering the nature we are operating in. Varun, anything to add on? Varun, are you there? Okay. So this is what your financial statements is about. Any questions so far?
So, like, how can we expect the questions like before going through F2, or how can we do this analysis before starting F2, or before even getting any um, you know like reading materials or anything like that? So it's that's the only concern for me right now, because um, although I can understand certain things in the financial statements, there are certain things that I don't understand yet. Maybe because of my lack of information, on that topic. But yeah.
Answering your question, you just need to know how the ratios function. And when it comes to ratios, it is your basic correlation between different ones and the relationship between each. So if you know what the numbers are, with that you can have that as a starting point to analyze, but you will have to get yourself deeply trained on specifics. So
Okay. Okay.
that's the way. Anything
Okay.
that you want to be clarified or you need more idea on within the financial statements one, because you said certain things you're not able to make complete sense of.
Yeah, I mean, I'll have to go through your sheet. If you can, like send it, or if you can share it in the group or anything like that. Probably I could
Hmm.
go through that, and maybe can, things that I really cannot understand right now. I could actually ask about it, like in the group itself, or to
Right.
you, like in a personal message. So if that's okay.
I'll do that, not an issue. Can you just tell me which one didn't make sense to you, if I can ask? It's okay to not know. I just want to have an understanding so that I can include more detail on it. That's the reason I'm asking, nothing else. Or what you feel as a gray area. Hmm? Hello?
Yeah, yeah.
Yeah.
Just trying to go through this.
Okay, okay. I thought I had lost you guys. That's why. Nothing else. Take your time, not an issue. Varun, what about you? Okay, okay.
Can you scroll to the dividends and that portion if possible?
Dividends, where exactly? Was
The
it
the
this?
I was not clear about the gearing thing, and yeah, that portion, the dividend cover and all that. So if you could go through that again for the gearing thing, like
Okay, we can do that. Just a second. What time? How long are your classes generally for?
it's for 2 hours
Okay,
from the
okay.
start. Yeah.
So your sessions are generally during the weekends, or?
Yes, it's always on the weekends, but yeah.
Right. Varun, do you have anything in specific to go through again? Okay. So, answering your question, Siddharth, what exactly gearing is? It's your long term solvency indicator. When I say solvency, it goes by the long term ability to meet the liabilities as they fall due.
Like for example, a loan payment.
Absolutely. It
Okay.
generally covers your long term lease contracts. Your leases generally, when it comes to an industry like Trimayr, would not be for a 5 or 10 year period. It'll at least be for 15 to 21. Going by the general norms, that's how it is. I don't know if Trimayr is in an exception model. There's not a lot of details given about the lease contracts. So
Yeah.
that
So
is
so like,
one.
how would we assume that? Like, do we take an assumption that based on the industry, okay, it could be that the lease period is going to be at least for 15 to 20 years. Do we like just assume that, or will that information be provided or during the exam or something like that?
You'll
I'm
be
not
given the information. You will be given the information. 99.99% you will. In case it doesn't, you can just make a note of, don't have to mention based on the industry standards. I have
sure.
made this assumption as so and so, because we are not sure which industry they have replicated. Always play safe when it comes to going with this.
Okay, okay.
So that's the one. Long term debt of the entity to capital employed gives the gearing percentage. So your debt to equity, that is what your gearing is all about. Capital employed can just be equity or debt plus equity. Looking at the financials, we can see there's a debt as well as an equity component. Debt finance must be used effectively to generate revenue and profits. Interest charged must be compared with interest that will become payable from other sources available to the entity. Sometimes debt is also secured on assets. Ensuring sufficient assets is also important. Your debt can be secured or unsecured. When I say secured, it's about making a charge to a particular asset, and when it's unsecured, it's just an overall debt. You're not saying that in the event of what is that word, non-payment, this asset will not be taken up. So that's the difference. So which is why your debt and asset also has a correlation, though it is in different ends, your assets and liabilities.
Okay. So, in terms of when you say interest charged must be compared with the interest that will become payable, like, uh, what is that interest charged actually? What could be that interest charged in terms of this industry and this business?
Okay, you have your accrual concept of recognizing interest, is that right?
Uh, yeah, yeah,
And there can also be some favorable agreements with between you and the bank, saying I will pay interest every 6 months, or suppose let's say there's additional revenue, I will pay more in this particular financial year. These are things that is possible from the from Trima's perspective.
right.
So in that case, what is being charged versus what is becoming payable, there is a difference. So balancing between both your
Oh, okay,
interest.
okay. In that sense, okay, understood. Okay, so let's say, for example, if you're paying, let's say if you're paying like $1,000 in your interest this month, and next month you're paying 1,000 plus your some of your principal, then there's a payable difference there.
Yes, yes, that's the difference. So,
Oh,
which is
okay,
why there can be fluctuations.
okay, okay,
This one is only a summary one. In the study text, it is more detailed. I have just prepared this for my revision basis.
okay, okay.
Right. So, analysis, this one is being used by your shareholders and creditors. Repayment of capital payment of interest. This is one aspect. Your capital payment, which we were just talking, the principal amount, and the regular interest that has to be paid. Your SOFP will give the current liquidity and the capital structure of the entity. Your current liquidity can be found out by looking at your current asset, sorry, your current and your quick ratio. The capital structure is given by the debt equity one. Your SOPL talks about the profitability, the ability to generate cash which may be used for repayment. Now, your interest is being charged irrespective of whether profits are there or not. It's only dividend that is paid based on the profit availability and the decision which is agreed at a board level.
Yeah.
Your risk appetite is known by analyzing the capital structure. If your long term debt is higher than the equity funds, creditors will look at charging a higher interest percentage, and shareholders, for them, their resources would decrease. They will not be interested to pump in more because they are the last ones to get the money out of the business, going in a very raw, basic sense.
Yeah. Yeah.
In case of high profits, after payment of interest, the balance is accruing to your shareholders, but in case of loss, interest payments have to be made. Whatever is being agreed and stipulated on a strict basis, those are non negotiables. So that's what it is.
Okay. Okay. Understood.
Great. Your interest cover is the number of times profit will cover the interest charge. So, higher the interest cover, higher the better. So, having stability in profits is key. Just one more thing to add on when it came to interest, there can be your interest rate swap options or change between your fixed to a floating interest rate. In that scenario, your interest amounts will vary to a greater extent. We are not sure what exactly is the interest or the loan payment agreement which Trimayr has entered into, but this is how your interest rates can fluctuate. Number of times profit will cover the dividend payments, that's what your dividend cover is. So these are the key ratios. I hope it's making more sense now, Siddharth.
Yes, it is. Yeah.
Great. Okay. Varun, any questions? Yes, it'll make more sense when you go through the notes. But as of now, I hope it's clear, at least to a good extent for a first time reader.
Yes, it does make sense. Yeah.
Okay, okay. Varun, can I hear from you as well, please? Great. So, just a small thing which I have in my mind right now. Rather than working out on the financials, I think we should look at our news articles and wrap up. Once you do these notes, it'll be better to analyze your financial statements. Or do you want to analyze right now? We can do whichever you guys want to. What's your
Uh,
preference?
I guess we could start with the new news articles.
Okay. Varun, is that fine, or do you want to cover everything and sit and study? Okay. Mm, Okay, so I hope there's a fair idea of what Trimayr is into. I'm not expecting a detailed analysis, but to a good extent, you have an idea what Trimayr is doing and all of that. That we can
Yes.
agree on? Yes,
Yeah.
okay. So, going by that, what impact does your news articles have on the company? This one will generally help in identifying the trends and predicting your potential unseen ones. Sorry to interrupt, is Rakesh going to join back or?
I don't know. Maybe he's having some trouble with his internet.
Okay, let me just check in the group.
Okay.
In case he's joining, let's just wait for him as well. Okay, he's saying that he'll join back. Let's just wait for him to come. Hello, Rakesh. So we were just discussing about your gearing ratios and what impact it has. I believe that's what happened after you left,
Yeah.
right? Any questions or any things to add on? Hello.
Nothing from my end.
Okay, okay. Just wanted to check with Rakesh.
Yeah, yeah. Sorry, miss. I was not part of that discussion, so I don't know anything.
No, no. We were just talking about the gearing ratios and what impact it has on the overalls. So that's what the discussion is. I was asking if we can do the financial statement analysis on another day or at least after the news articles because Siddharth and Varun prefer that. They just want some time to go through the notes.
Okay, I think I'm also okay with them.
Okay. So coming back to the news articles, to give a brief of what I was saying, your news articles will dictate what the trends are, where exactly Trimayr is standing, and what are the potential unseen questions you can expect. So the first one is a local newspaper, Dazzland Daily News. So have we made headlines or what is it? Let's look at that. Hairdressing has traditionally been a popular career choice for school leavers. Okay, so we have it's the we can say that we have steady labor inflow.
Yes.
It generally attracts those with an interest in fashion who have creative personalities and who enjoy working with their hands. So these are your what do I say, prerequisites or the soft skills which is needed. Now this soft skill testing or benchmarking is another critical aspect. Now how exactly can you benchmark this? How will you bring this in financial numbers? Any ideas how this can be monetized?
This will help to improve the revenue because fashion will have created personalized.
Mm,
So this will help in boosting the revenue.
right, right. So what KPIs can we suggest? That is a possible question. Once qualified, there are two routes. One is through your college and another is through your apprenticeship. Hairdressers can pursue a variety of opportunities, ranging from working in a local salon to working in the beauty salon of a cruise ship. Okay, so there are two choices. Either I stay within the same place or I'm on the go. Now, which one is preferred over which? If there's an increasing trend towards your cruise ship, you're not having people to cater to consumers who walk into the salons. Now, what is the backup plan? What succession of labor do I have in place? Do you think this can be a potential risk and something that has to be mitigated? What are your thoughts?
So here I think the employee attrition will be higher.
Right, right.
So
Now,
that will
how? Please go on.
So that is one of the important element in hairdressing, means any hospital business, or say, let's
Hmm.
say when we are doing a trimmer, see what means I did my personal what you call.
Okay.
So where I asked, what is the major challenge you face? They said that one of the important major challenge they face is the employee attrition rate. If they get paid little higher from other competitor, they will go and join them.
Hmm. So can we have non-competes signed? Can we draft
So
a contract that way?
strong contractual agreement required, but that will also not stop them for working months. It will be hold them for 6 months, right? A max,
A max.
not for whole life.
That is true. So your talent retention is highly critical here.
Yeah, and again, retaining and sustaining. See,
Hmm.
means if you means just like give an example of ours. When we join a company in an X in X year, the first year. So if I'm planning to stay in that company for 5 years, so company and I should know no means what kind of growth plan will be given to this guy, right?
Right. Right.
Project. So that gives a motivation for retaining employee,
Hmm.
because they'll understand, yes, if I stay with this company, my pay package, my benefits will grow. But if you don't show anything, the bigger picture, then people will not understand, they'll leave. So
Very
retaining
true. And there was also a mention in the pre-scene saying that your hairdressers are not just taking care of the styling aspect, they can also turn into managers. Now, if they are going to turn into managers, dual role, and you give them increasing responsibilities, you are also not having to hire two people, and you're also retaining your talent by showing an increased financial returns. That's one possibility which we have.
and that's a bigger cost. When you hire
Mm-hmm.
a manager and when other guys, by
Mm,
giving a 20% raise, you're saving 80%, right?
right,
That happen.
right.
Efficient utilization of resource will happen.
Hmm. And at the same time, managing is also not uh, a skill which every hairdresser or a hairstylist can be expected to have. So we'll have to look at that also. Some are attracted by the possibility of opening their own salons once they are qualified and have accumulated some experience. There's no way we can prevent this, as we just discussed. No contracts or anything can stop new things from happening. This is an inevitable risk which we will have to accept. So, as we know, there are two routes, one is your college and another is an apprenticeship. There is surprisingly little difference between the two. Now, what is the difference between two? The difference is, for an apprenticeship, you're being paid some stipends, but for a college one, I don't think it is possible.
I think it also has to do with more on the job training for being an apprentice, and both like, let's say if you're a student in a university that teaches
Mm-hmm.
this, and you don't have as much as a real life experience that of apprentice,
Right.
because you'll be mostly training with, initially starting off with mannequins and
Mm,
hair wigs and all that. But as an apprentice, you'll be really starting with, you know, someone really there. There's a person there.
that's
So
true.
yeah, the quality of experience that you learn from an apprenticeship versus a university degree is different.
Mm. So, in such a case, there should be more movement or at least a gravitating trend towards your apprenticeship, because you're also paid and also the quality of experience is higher. It's only a 2 year period and the duration is also pretty much the same, which explains why there's little difference.
Yeah, and if a college has a, let's say if they have an internship, like
Mm,
after their in 1 year time, let's say 6 months is classes, and another 6 months you have to get an internship from a real salon or something like that to qualify or to graduate. Then that could add value to your certification and your experience.
Absolutely, I agree. So your most local colleges offer hairdressing courses. They are full time, but all courses require students to complete periods of practical experience. So it's covering the point which you said, internship, and it's all courses. So whenever there's a hairdressing course suggested, we can say that there's a hands on experience as well. Most college students seek part time employment in local salons in order to fund their courses while gaining additional experience. Now, is there a heavy student loan crisis? Can this be there?
Yes, because usually usually this kind
Mm,
of preferred not everybody, and usually it is morely 80,000 1 lakh charges for the classes. If you go for a more higher and professional course, it will be higher.
right.
So in that scenario, I think working part time and funding their thing
Mm,
that will happen.
that's true. That's true.
Because I know one of my friend, she used to do that. So her
Mm-hmm.
fees were 40,000. 40,000 is not a big amount per se. Okay, but people from outside Mumbai, they were coming in Mumbai, staying and doing that. So their staying cost, doing the course cost, it is a huge.
It is a huge expense without any doubt.
Yeah. So because staying in Mumbai, that is
Mm,
again a bigger expense. Of course,
that's true.
that is a short-term course. But if you do a professional course for a 6 month, 1 year certification course, definitely it will be higher charges.
Right, right. But your apprentices are your full time employees. Now, what exactly are the salons preferring? Are they okay to have, to manage your part time versus your full time? What is their trend? If I don't have enough of customers, or if I don't see any benefit in having a part time, why exactly would I hire them? And the only place for these college students to go for an employment, assuming they want to be in the same line of training, it's only a salons. So the what exactly is your salon preferences, that is something which we will have to evaluate. Agreed to this point?
Yes.
Great. So they
But
receive
even if
train.
they are even if they're full time, apprentices normally cost less, right?
Hmm.
For the
When
salon.
come should be. They say that it's a lower level of pay and not a higher skill job is given immediately. So
Yeah.
the payment terms, or how exactly the compensation is drafted.
That will also give one thing, in
Mm,
apprenticeship, they will, they will know who is doing good.
right.
So hiring cost, if they go and hire from outside market, that will come down.
Mm,
And they will retain the best guy and they'll ask the other guy to go. And in the same way, they will, means in that tenure, and they'll just groom that particular person. So he'll start at a lower pay package, not at a higher, if you
right.
become a good stylist. So that
Mm,
that way trimmer can save cost, high in cost effective hiring training.
agreed. Agreed. So in that case, why would I need a part-time employee? So can we say that them getting a job is pretty much limited because of your apprentice's presence?
Part time again depends upon festive season, right? You cannot have
Hmm,
more employees hired for a just short term period. So
right.
they will be a game changer, either having a fixed cost, putting in the balance sheet in the P&L. So we can
Hmm,
for a part time during such scenario, because nowadays every now and then this day that day will come. Women days, men day, father day, mother day. So all this day required some special preparation for men.
agreed.
And so for that purpose, part time will play a role.
So the demand or the chances of them getting employed is fluctuant. When compared to your apprentices, generally, if I was in the salon position making a decision, I would prefer having an apprentice over a part time person. And again, this is looking at the demand prediction. One key advantage looking at your apprentices is they receive training from qualified hairdressers. So, this can be as a significant advantage over your college ones because having it throughout versus having it in restricted classes, there's always a difference. Initially, they can expect to be given menial tasks. This is again only in the initial ones. By the end, only they are getting into the main one, you're styling and treating. So, this growth or this change is pretty self explanatory. It requires serious commitment to qualify as a hairdresser, regardless of the route that is taken. In the initial pages, there was a mention that in theory, anyone can start after their basic education to be a hairdresser, but not everyone gets to be employed as one. So, the difference between your theory and reality is this. Anything more to add on with this news article?
No.
Okay. Varun? Oh, he's not there in the meet.
No, no, I think he's not there. We three.
Okay. Right, right. I didn't know that.
Okay.
Okay. So going to the next one, personal finance. You don't always have to pay to have your hair styled. So is it like buy now, pay later schemes? So we were saying that as we were discussing before, this one there is a cash that is going to be generated. Why would there be a cash crunch if this is the scenario? Credit even for your customers at a retail outlet. I don't know what the future holds. This sounds even more scary and reckless spending on a consumer. Now we can say with Zomato and Swiggy, you can buy now and pay later. Now, let's say somebody who does not have the means to afford it, they go on it. It leads to a serious credit trap.
Yeah, that's true.
So this is not really good for grooming your consumers or the general
But
public.
Taruni, I have seen
Mm,
this. Okay, means when you spend higher, I think in India
mm,
specifically,
mm.
Bajaj gives EMI facility everywhere. You must have heard Bajaj name.
Yes, yes.
I think they will give me. Currently, I'm in a hospital where they're giving for anything and everything. I mean, if you're
Anything
medical
and
things, yeah.
everything. Mm.
So
That's
logically, they give this in the salon business also. If the cost is higher, then
mm.
they will say that you can pay in EMI. Some,
That's actually leading to loss of control or something. It's
but
putting.
but there we do not get into problem, right? When you
Mm,
send when you say EMI portion, I'll get paid from Bajaj from the financial institution quickly. It is the
mm.
financial institution and the customer headache, not mine, right?
That's true. As a one
So
for the business, it's not an issue.
for my business perspective, my account receivables will not get hampered. It will get paid on time on the same day.
Mm, mm.
Okay. So there might be even the Bajaj and we can get into agreement, and when Bajaj pays, we might have used some discount to Bajaj so that that might be happening, right? Otherwise, nothing else.
Right, right.
Yeah.
So it depends on the contracts with finance providers.
Yeah. And but that will also help in booming the business
Mm-hmm.
because I see the average spend done by a woman and by men, this woman is always higher
No second thoughts to it.
because
It's
just doing a coloring, they'll just charge global color with highlights. They'll charge 7,000, 8,000, depend upon which salon you are going,
right,
right?
right.
And then if you go for a spa and also, so their spend is higher. And
Mm.
such scenario to attract mid class people, middle category two. So we can give such kind of thing where they means how it happened in USA. If you do not have in pocket, you can still spend to credit card. So if you do not have, still you can go for a grooming services, and you can pay later to the financial institution. That will help to boom in revenue. Parallelly, it attracts more footfall.
It does attract more footfall. But the long ranging impact, now when will my finance providers be ready to give this as a contract or something like that? Only when they know they can recover the cost. So if anyone and everyone can be given a chance to make use of this buy now pay later, will finance providers towards the end start withdrawing?
No, no. Again, here they will have this quick checkup. That means
Hmm.
digital banking will quickly help. They'll take their PAN number and they'll check if they have a good credit history, good pay credit history. So those can be qualified. Those who are
Hmm.
not, so they will save their by doing a proper credit rating for all the customer who are going for that kind of thing.
Right. So background verification of customers, credit
Yeah.
history matters.
Nowadays, CBIL on the line when means if you apply for any loan online,
Hmm.
just putting that they'll say, oh, your credit history is this, you are eligible.
Right.
It is so fast. So
Hmm.
so because of digitization, so I don't think that would be a major concern.
Agreed. Agreed. Which can be embarrassing if that means attending a job interview or other event with untidy hair. So visual appearance is dictating the one. Visual appearance, your customers are conscious of this. One possible solution is to look at the websites of local further education colleges that offer courses in hairdressing. Okay, they are often looking for volunteers on whom their students can put their classroom lessons into practice. The price of a haircut and blow dry can vary from nothing at all to a small fee or just a few dollars. Oh, okay. Now, what do you guys think about this? I'm getting it free of cost, but am I ready to risk my hair? Am I ready to risk me as a person going right there? The
Personally,
reputation.
personally,
Yes,
I will not risk my hair.
right.
But I don't know. There may be people who are ready for that. So
I will also not go for it. I'd rather go on a credit basis. I'm not ready to put my visual appearance down for all reasons. So, how far is the solution feasible?
Sorry, Tarun, can you come again? Sorry, I just missed that.
No problem. I was saying one possible solution is to get your consumers to your education colleges. Now, these colleges are giving on the job training, and so you're getting a haircut for free, or at least you just have to pay a small fee when compared to the salon price. Now, are customers ready for this? If I have to make this choice, I am not ready for it.
No, so I mean, so why? Let me ask you this question: why you're not ready for this?
What if my visual appearance is hampered? What if it's again training for them, but for me, I would rather go for a
Okay,
buy now
okay,
pay later thing.
okay. From the visual empathy, that's true. That's
That's the one. So we'll have to see, are customers really that desperate?
no. Again, depends upon the suppose now
Hmm,
you see if you're in which type of industry in working. Suppose that is also a matter.
very
Suppose,
true.
for example, I'm a very my is a back end job. So if something is happening free or at a lower cost, that that will not means have greater impact on my vision. I think I can go for it. Means I don't think that's any problem.
Hmm. So let's say if the college reputation is very strong and they have only your, uh, what do I say, the best of best talents coming out of it, in that case, I might consider going.
But Tarun, one more thing, usually when the doctors learning, they
Hmm.
need patient. So
But
for an
they will.
IMB, that what is Indian Institute or IFP, I'm not sure what is that.
Mhm.
Okay. So they open an outlet in Prabhadev in India, okay, Mumbai. So where they treat dental related at a lower cost. In if you
Right.
see that cost outside of India is at higher rate.
Hmm.
So but they do it. They have all the well equipped machineries to take care. In that scenario, let me ask you whether you'll go for it or you'll not go for it.
For healthcare, it is a different one because before letting them treat the patients, there will be a lot of training and always under the constant supervision. But looking at this creative space, what if it's just a second for things to go the other way?
Oh. It
So,
is same thing, you know. Means my perception perception is this, that this guys also will go a lot of training, because when they have to use the razor, that is
hmm,
some skill safety. So you know how surgeons use the razor, the same way these guys are using it when they just clean at the end, right, for men. Usually they don't do it for women, but that is that requires a special skill, and they teach that, right?
right. It's again subject to this one. It's very subjective, but I am very conscious towards these things. So personally, I would not be ready for it. That's my personal choice. But your points
But
are really valid. I agree to it. You why not take a try?
also, like, I could accept, or I could agree to the situation, provided that, okay, we know that Trimayr is a very good brand, and
Hmm.
also a market leader. Let's say if it this is, let's assume that this salon that I'm going is the premium one, okay, and it's very expensive to get a haircut.
Hmm.
Maybe if an apprentice or a student is, getting my haircut, I'll trust the brand. I'll trust the brand hiring a student who's very good,
Right.
at
So
what
your
he does.
reputation dictates that.
Exactly. The
Agree.
company reputation, as well as the education, the where he's coming from, which university he's coming from, or what course did he do, or whatever, something like that.
Hmm. It does matter. I agree. Let me just check if Varun has a potential to join. I don't know. Just a second. I'll just type that message out.
Just to let you know, I have to step out in like
Okay.
10 15 minutes, 10
We
15
will
minutes.
we'll wrap up by 9:30 for sure. Not a problem. We'll continue the rest in the next session.
Okay, okay.
Okay. So yes, there is a risk that student might not have acquired all the skills necessary to cut your hair properly. So this is a known risk.
No, no. Sorry, just a
Mm.
question. When students are not well equipped
Mm.
with all the skill set required, do you think any institution or any salon will put their reputation or goodwill on risk by
Mm,
doing
they
so?
will they will not, but there's always that little bit of chance for something like this to happen. There is a known risk for sure. End of the day, an experienced versus a student, there is a difference.
I mean, it
Okay.
also depends on the salon to do what is like. Let's say if something goes wrong, okay. Let's
Hmm.
say if something goes wrong, and then the customer is really really upset, and let's say if that customer has been a loyal customer for a long time,
Hmm.
you might give some kind of benefit to the customer. Let's say, okay, free, next 5 haircuts can be free, or next 5 whatever he does every time he visits can be free of
Right.
cost, because of that mistake that the person did. In that case, even if the reputation is slightly you know gone there, it could be regained because of how well they treat their customers, or doing a good after service, after sales service, something like that.
Right. Right. It's possible it can be that way. So, how exactly are you mitigating this risk that can reduce the negative impact? Okay, so this one is purely a luck driven one. Lucky enough to live within traveling distance of training center run by a large chain of hairdressers. They are mentioning about the competitor Palu and True. So they have their apprentice training going on in two sites. Now, how exactly is Trimayr competing on these angles? That will say if we are on top of the race or not. You can have the hair styled at either, okay, one either in the central part or the north city. I think your central city has your upmarket salons. You might even be lucky enough to be offered a treatment such as dye or perm if there are apprentices on hand who require experience in such skills. So, what exactly is the requirement for the apprentice training? That is the service which you get. Hmm. Sorry, customer gets the service. Another possibility is to visit your local salon and ask to have your hair cut by an apprentice. Okay. So customers have the choice of selecting who is going to do. So that can be your price differentiation. And salon manager is always there to supervise. Any points to add on? I think I would go for the second option over the first one.
Like, I also think there are certain salons who will not, like, let's say I've noticed something here in
Mm-hmm.
Canada is that there are salons who charged by who's doing their haircut. Like, for
Right.
example, if the shop owner is doing, if a senior is doing, or if someone mid-experienced or who is an apprentice is doing, let's say these are the four types of people who are there employed.
Mm.
Okay, and then there'll be, let's say, $20 for the apprentice, 25 for the intermediate, $30 for the more experienced one. And if you want your hair done by the owner himself, then he might charge you like $40. But
Right.
the person who's booking it, he'll not know. Like, I'll not know
Mm.
uh, who's the owner, or maybe I'll know who's the owner, but I'll not know who the apprentice is or who the other person is. Just based out of that with their names, I'll only know, yeah, on how well they do their work when I'm sitting in front of them. So
I agree, it does, but would you be comfortable to explore at a salon over a training center? I would go for a salon because your apprentice is likely to be more trained, more supervised when compared to a college trainee.
yes, and there'll always be a manager or a supervisor there around.
Mm,
So if anything goes wrong, they can handle. So
right. No matter your college ones are being, there's a supervisor right there. It's your teaching staff, so the skill set differences. That's another differentiating factor between a salon manager and. Okay. So that's about it for today. There's just 4 more minutes and we'll wrap up with this if it's okay and good to go. We'll cover the rest tomorrow.
okay,
Or, right. I will share the notes very soon. I'll just check with Misbah on how it can be posted and we'll see. Anything else?
No, that's everything. Like, I don't have
No,
anything.
that's it.
Okay. So we'll end the day then. Thank you so much.
Thank you. Have a good
Thank
day.
you. You too. Bye. Bye.